Looks great. I think we're going to get started. Well, hello, everyone. Thank you for joining us for a Women of the Vine and Spirits live webinar. Topics today is 3 key ways to perfect your pitch. We have host Deborah Brenner, founder and CEO of Women of the Vine and Spirits. Hi, Deborah. And Karen Hoskin, president, CEO, co-founder, and co-owner of Montanya Distillers. And Jen Evans, Vice President of Constellation Ventures at Constellation Brands, as they discuss key ways to prevent the perfect pitch. Thank you all for being here, and I'm going to hand this off to Deborah.
Thank you. Thanks so much, Diana. We're so thrilled. I first want to thank our guests for being here. Many of the our little entrepreneur group may know that we formed this when Karen and the Women's Distillery Group started joining us and a few other women. And we are just thrilled to keep this conversation going to support women supporting other women. And I can't think of a better topic than venture capital. Because this is a topic we really need to talk about for women, and especially in alcohol beverage. You know, one of the things that we're looking here is that, you know, women-led businesses is the fastest growing segment in the United States. However, still statistically, women are getting the least amount of venture capital, right? So according to PitchBook in 2017, there was a total of $85 billion invested by venture capitalists, and yet all women teams only received just $1.9 billion out of that $85 billion. So as you can imagine, that's equal to about 2.2%. Meanwhile, all male teams received $66.9 billion. That is roughly 79%. And we don't actually have confirmation of statistics in gender mixed teams of what that looks like. But I think you can really see from that. Not only are women getting the least amount of funding, but it's also troubling when we talk about the alcohol beverage industry, because when you look at the consumer, nearly half of alcohol beverage is category consumer base is female. So it almost seems like what's missing here. So if I sound like it's a really sad story, I want to say that I'm thrilled because there is a silver lining. And that's why everybody wants to be here to hear from Jen Evans and what Constellation is doing. I think that the minute one of our members sent me the press release about Constellation Ventures pledging to intend to invest $100 million in female-founded or female-led businesses, and calling the program Focus on Female Founders, I think I immediately was emailing every contact to reach out to Jen and Bill Newlands and Malika, so I could be here, since Women of Vine and Spirits' mission is to empower and advance. And I truly believe that the way to gender equality is economic empowerment. So let's talk money. Let's talk VC. Jen, I want to start with you. You can introduce yourself and how exciting it is to be one of the very few women in venture capital and running this fund.
Yeah, thank you so much. And hi, everyone. It's great to see you or be seen by you. So yes, as Deborah said, I mean, those facts around how little funding goes to female founders, but also there are many statistics that show that female-led businesses and businesses that have diverse teams, they perform far better than teams that have, are represented only by one specific group. So that's really what led us to launch this initiative. We're extremely excited about it. We've received tremendous response from many of you, actually. So yeah, it's just been a wonderful ride. So yeah, I mean, Deborah, let me know. I'm happy to just launch in and give sort of a high-level overview of what I personally look for in terms of pitches, and then also talk about, just a couple of, really interesting research points that I think would be salient for this group.
Absolutely. So before you jump into that, Jen, because I'm sure everybody's waiting, I just want to put in context that Karen, who's on the call, recently pitched to Constellation, and she was kind enough to share with me and a few other members that she pitched, and that's why we said, we'd love to get both sides, right, of how what you're looking for, and then how Karen came about and how she prepared herself. I think that's perfect. So I'll let you launch right into what you're looking for.
Okay, great, thanks. So, a lot of it is, it sounds pretty intuitive, but I'll just walk through kind of how I think about it in terms of a story. So the first thing, which, everybody knows, but it's be prepared. Really have done your thinking, crafted your story ahead of time. And that's everything from starting from, what's happening in the overall category for the area in which you're pitching. Is there competition? What does that look like? What is your product or offering? How is that differentiated from everything else that's out there? Really having a sound business case that's been thought through in terms of how you're going to achieve the growth, what resources you need. A lot of times what investors are looking for is just making sure that the person has really thought this through, because an investment, especially from a strategic investor, it's in the brand and the product, but it's in the person as well. And so you really want to trust that person has done their homework, really has the passion and the vision, and also the sort of the business acumen to bring it all to life. So that kind of in a nutshell is what we're looking for. But the one additional piece that I'll add that I think will hopefully help this group, as I've been doing a lot of research, there's been a lot of talk around unconscious bias and how that comes to light in terms of how people react in different environments. And one statistic I found that was really interesting is in a VC pitch or any investment pitch scenario, they found that the investors tended to ask female founders or entrepreneurs different types of questions than male entrepreneurs. And so Harvard Business School did a study, and basically they call them promotional type questions and preventative questions. Promotional are more open-ended, kind of growth-oriented questions. So an example could be, how are you planning to monetize this idea and grow your business? A preventative question along those veins would be, when will you be cash flow positive? And so you can see when someone has asked a promotional question, they respond in a very, oriented way. Whereas if it's a preventative question, oftentimes it puts the person at the defensive, and the answer is a lot smaller. And what they found is women, I think, were 65% more likely to be asked preventative questions, while men were 65% more likely to get promotional questions. So the key as female entrepreneurs is to really listen to the types of questions you're being answered, and then make sure if it's phrased in a preventative way, flip it so that your answer is very much in that promotional sort of growth mindset. So I thought that was fascinating. And, the one other stat I'll share before I hand it over to Karen is, as I think Deb pointed out, the vast majority of investors today are men. And so, I think the statistic is 7% of female partners at VC firms, or 7% of partners at VC firms are female. 12% of corporate venture VCs are female. So, unfortunately, we do live in a time when people do tend to invest in and look to hire, et cetera, folks who are similar to them or who they seem to be able to relate to better. So, we as women just have to know that that's the environment we're playing in, and prepare, try to understand, who you're pitching to, how your product can really fit in and help them in their business and fill a gap that they have. And then again, being really aware of how questions are being posed to you and how you respond. So with that, I guess I'll turn it over to Karen.
Before we jump to Karen, we talk a lot about unconscious bias, right? Did you get a feeling with the study? I had read that study as well myself. Did you get a feeling with that study that the reason why preventative versus promotional is it just that they don't have the same confidence level in a female-led company, that they're more nervous and more of checking, you know, the pitfalls?
I think you're right. There's definitely research that shows that people, you know, people tend to need more reasons to believe in something that they're less familiar with, which makes sense, I suppose. But you know, but what happens then is, so again, as most investors are male, you know, even from a social context, they might immediately identify, you know, more or strongly with a male entrepreneur, and you know, a female entrepreneur is less known, and so therefore, you know, is being asked questions to prove herself more.
You know, I recently also read an interesting article, and then I'll throw it to Karen, and what I love about Constellation, seeing that women can be driving trends in alcohol. A woman wrote in a blog about trying to raise capital, and she created some really spectacular new bra. And so you can imagine she's pitching men to get capital for, I can only imagine if Sarah Blakely from Spanx, you know, how do you tell men that you need a girdle, right? So it could be, you know, what you said, it's what they know.
Mm-hmm.
So not only, you know, here we're an alcohol beverage, but it made me really think about, like, you know, what about like if you're pitching that next best, you know, skin cream or something, how are they going to relate? And they're all men. So it's really fascinating to hear that.
Yeah, and I'd say just quickly, sorry, Karen, I really want to hear from you. To that point, yeah, but to that point, Deb, I think that's right. And so that's where being prepared and being able to tell a story around why the category that you're pitching is attractive in general, and then why you are going to stand out and really break out. So even if it's a, you know, a category that the investor is not familiar with, you can help familiarize them to it and get them really excited about why they want to invest there.
Great, thank you. So Karen, is Constellation the first company you pitched? Have you pitched others?
I have pitched successfully a number of times. So initially angel kind of investment, and then institutional investment. So I have both angel and institutional already inside the company. Constellation is my first venture fund that I pitched at this level. I shouldn't say it's my first pitch, but it's the first pitch at this level. And so, yeah, I mean, I think the first thing I really wanted to say is that, you know, the word perfect, like any kind of perfect pitch, like to some extent we have to get rid of that out of our own thinking, because there is no such thing, and there's certainly no chance that I did a perfect pitch. And there's no chance that my total submission will be perfect. And I think it's appropriate that we talk about, you know, making ourselves vulnerable in this process. And so I want this webinar group to know that I'm actually, I hope that Jen will feedback in this group about not only what she liked about what I talked about or my pitch, but also what she wished I may have done better or differently, using me as a case study. And that was kind of how you and I, Deborah, originally spoke of this. You know, I said immediately, like, don't you want to wait till we see how this comes out? And I felt really strongly that the most important thing for me, as if I'm truly a leader of women entrepreneurs, is to be willing and able to make myself vulnerable, not at the end when I've succeeded, but along the way, and recognizing that what is important here from my perspective is what I did to prepare, which was extensive and intense, and so much mentoring and so much coaching on my side before I even walked into a room with Jen. And I think there's a lot I can bring to that, not from myself, but from the people that I involved and felt like gave me incredible advice, and what I was able to translate from their advice into an actual process in a room with Jen and in a room with Constellation, and where that has taken us since, and what I had to be prepared for in order to follow all the steps forward once we had a chance to have our initial meeting. So, yeah.
So, and Karen, just let me ask you, is your laptop on something that's moving? Because you're moving around a lot.
Sorry about that. I'm not sitting at a desk right now, so I will be conscious. Sorry.
No, well, you know what? I'm a sailor, so if I was talking to my team, they'd say, "I don't think you're in your office. You're on the sailboat." No, but no, I love. Can I just say thank you so much for your willingness? Because typical me, I was like, let's not wait. These women are out there pitching, and it's a process. And I want to thank you for being vulnerable and allowing yourself to come on now and not waiting, because it isn't. I always say for my journey, right? Because I pitched capital, I raised capital in the past out of wine business, and that. It really is and anybody that is dating with or a family member of an entrepreneur knows it's a marathon, not a sprint, because it is all over the place and we want to sprint. So I thank you for that. And I think, you brought up one of the things about angel versus now institutional. And one of the questions that was presented to me before by one of our attendees is, and this is a question for both of you, how do you know when your company is ready to pitch for VC?
I think Jen should start that one off.
Okay. Yeah, it's interesting because like everything, it can be too early or it could be too late. Deb, you and I were talking, if you wait till it's dire and you need the funds or the game is over, that can often be too late in the sense that it can scare investors because it feels like a situation that's out of control. I would say, every investor is different in terms of what they're looking for. For us at Constellation, we're looking for high growth brands. So, brands are positioned in categories that are growing, and the brand itself has shown strong growth. We're looking for high margin businesses. So oftentimes there are businesses that need, startup costs and COGS in the beginning can be, difficult before there's a little bit of scale. So sometimes getting a bit of runway under your belt to normalize your margins and get them to be as sustainably high as possible makes sense. And then, we're looking for proven consumer acceptance. So really, often it depends on the business or the brand, but it could mean really showing how you've won in your home market and maybe some periphery markets. So we're personally looking for companies that have been around long enough to establish at least a bit of a trend to show that there's a growth potential.
That's great. And Karen, when you started with VC and then made the change to institutional, what prompted you? How did you know when you were ready? Any signs for other people to recognize?
Yeah, I think for me, immediately when this announcement came out from Constellation, I have been avoiding many institutional investors and many larger, what I would describe as, alcohol beverage venture, alcohol beverage kind of, development that's going on. I had avoided a lot of that because I knew what I was getting myself into in terms of what my own vision, me as a founder, what I wanted versus what those companies might want from me. But I'd been watching so carefully already what Constellation was doing, and I really felt so strongly that they were cultivating a different model, which was, identify these strong founder brands, strong home of the brand kind of companies, recognizing the high, the growth potential, the category potential, but then also really kind of coming in at a point where the company was already doing its thing and doing it well and doing it with leadership and getting behind that. And then if after a certain amount of time or after a certain aggressive set of goals were set between the two organizations, that then at some later point there would be more direct involvement. But that was the first time really that I felt the sense of, this is the right fit for my company. And I think, I can't say enough, like that's the first step always, is not, I need capital, not I'm desperate for venture. I'm going to go to all 30 of these companies, but is this the right fit? And why is it the right fit? And, I think Jen would tell you, and and most of the people on this call know, a lot of what I've done over the last 10 years has been working to kind of cultivate and bring up women in leadership in the craft spirits world alongside me and along with me. And, I sort of had this crazy thought of finally, the conversation has come toward me. And so it was really exciting. It was the first kind of moment for me of I'm actually really seeing the conversation be in this venture world where I want it to be as well. So I've been, kind of doing what I've done over 10 years with very little capital support, by choice, by not going into some of those bigger relationships. And this was the right fit for me. It may not, it still remains to be seen if we can fit all the pieces of the puzzle onto the table at the same time, because there's so many pieces. And I'm happy to talk about what and I'm sure Jen is too, as to what I see those pieces being. But for me, the first step was identifying a fund that was on the same page in terms of strategy and the way that they were going to get behind Montanya Distillers. And then the second step being, how do I come into that as the best possible self, the best possible expression of who my company is as possible, not morphing myself into what I think someone else wants me to be, which I could have done many times along the way. But really focusing on, this is who I am, this is what I'm doing, this is what I've done, and can we find a place and a fit to work together on it?
Yeah, I think that's critical, what Karen just said, around, and that's part of the journey in preparation, which is really understanding you and what you're looking for as the founder, what you're looking for in a partner, and then being true to that and not trying to make yourself appear the way you think the investor is looking for you to appear, because authenticity is real for consumers, it's real for investors. You're investing in the person, and so you want to, as the investor or as the entrepreneur who's pitching, you want to make sure that you're presenting your true self so that the investor is really choosing you and investing in you. So I 100% agree with what Karen said.
And Jen, I love what you said about, being the real self and the fact of authenticity to the consumer. Do you think that in today's world and where we are today, we're seeing more and more people, we're calling them, consumer activists, right? Is because there's a lot of power and the purchasing power, and of course with women. And I think that they truly do want to understand who's behind the brands. Do you think that is leading also to Constellation, other VCs, to really look for brands that have a founder's DNA in it, because it's different?
Yeah, I think so. I think there are so many different categories out there, and people play, in all of them. We at Constellation, we're very focused on premiumization and playing at the premium end of things. And so, along with that comes, craft and true stories with real founders. I mean, that certainly fits in there.
That's great. Because, when I first came out with the wine brand in 2007, 2008, we were the first collaborative of artisan top, women winemakers. And I was told this was a gimmick. And yet at that same time is when Flirt and Mommy's Time Out and Mad Housewife and all of the marketing brands were just starting to come alive into the market. Yet we had artists and women winemakers in it, but so I think the timing for now and what Constellation's doing, looking for that founder story is so fantastic. And the other thing that Karen, you brought up about making sure it's a fit as well as Jen, and we had a question from one of our before email me. One of the tough things for a founder is how do you work financially with raising capital, but continue to own, and have that DNA of the founder in the brand. Because Karen, it sounds like that was a big concern until you felt you found the right partner, and Jen, I would imagine Constellation doesn't want to take that away, but at the end of the day, you have to make brands profitable and better margins. Do you have any advice for the women out there?
Yeah, Karen, I'll defer to you first.
There's a little anecdote for me on this, which is that I had an opportunity to work with another company, and as we kind of got deeper and deeper into the conversation, one of the things that I realized was that they were going to want to change the way we fit into our category. So I've worked for years to fit us into the kind of premiumization side of our category, which a premium spirit, as we know, and especially in the rum category, they're on the rise for sure, but they're not meteorically rising. And so they wanted to sort of get me to think about lower price points, more mass market rums, things that would kind of drive revenues way high really quickly, low cost of goods sold. And I don't feel that that's the direction that the trend is going. I feel like mass market rum is potentially flat or trending downward. Premium rum is going to be where the category is going to succeed. And so that was a tough one for me. It's like, do I take several $1 million from a company that wants to change me, even though it probably would make more money ultimately, it probably would drive revenues more quickly. I just felt this sense of I need to stay true to my instincts about this long term. And so that was another kind of concept of fit, that was not going to be a fit for me. And so in terms of like the ultimate question that Deborah's asking, which is how do you kind of retain yourself through this process? For me, it's always been really important to control my management interest for now, because if the company is still growing to the point where I think I bring a lot to the table. So, I've structured the company where I will for now have lots of strong input into the management decisions at every level. And that's in our operating agreement. That's in everything that we do in the business back end to create the DNA of the company. Who makes the decisions, how are they made? And that's all really clearly defined in our operating agreement. But then there's this board structure, which is kind of an overlay on top of an operating agreement. And the thing I got most excited about, I realized with Constellation versus other companies that I had looked at, was that Constellation has these incredible women actually inside the organization doing millennial marketing and working on building other brands, and Jen having had so much international marketing and sales experience prior to even coming into venture. And you really want to look at the company that you're working with. Do they reflect yourself in some way? Because otherwise you're always going to feel somewhat like an outsider once you're closer together. And that's what I got excited about with Constellation, was the representation of strong women in leadership within the company that I wasn't seeing in some of the other venture firms and the backers that I looked at.
Fantastic.
That's great. Thanks.
we,
Oh
we,
yeah,
we have a
I
lot
was
of
just,
people. I just want to say, for anybody on the call that has questions, there's a little Q&A box on the bottom, and you are able to type in your questions for me to post to Jen and Karen. So please, feel free to use that Q&A, because we want to make sure that you're getting what you need out of this this first of our hopefully could be a series. But so please use that Q&A and feel free to chime in. Jen, do you have any comment about that kind of retention and ownership and staying true to the founder's brand vision?
yeah, absolutely. So Karen, thank you for your kind words. I agree that, Constellation's view, we are partners. We view our investments, our portfolio companies as partners, and we want the founders to really, they are still the ones driving the business day to day. We hopefully offer a lot of value added support, around everything from, brand positioning help to thinking through route to market, to, whatever it is, market expansion, prioritization, all that good stuff. But it's still the founder and the team that are pushing the day-to-day forward. So, we're committed to making sure that the founder is front and center and it's their vision being realized. And so I guess that goes back to that fit question and making sure that that there is a strong fit there, because it's all down to making sure that you've got that right balance in the partnership.
I think that's wonderful, Jen, and I think it's really important, especially because earlier we talked about, you have a lot more negotiating power when you're not going in too late to raise capital. So I think, like what you said, that's where sometimes not being the right fit may happen, because you just don't have as much flexibility. And it's so important because it is a partnership. We do have a question that just came in asking, what are some of the red flags that you see in pitches? This is to Jen. What do you see the red flags in pitches that warns you away from investing in a person or a company?
It's a great question. Investors don't like risk. Risk is scary. And so I'd say the pitfalls that I've seen are if it's clear that, maybe there's a good idea there, but it's just really not been thought through. Sometimes I've seen, really lofty growth goals that are being pitched, but without really a substantial plan for how that would be realized. So again, that basically calls into question whether there's a truly robust plan and, if there's been good strategic thought put into it. So, it's really anything that makes it seem that the person's unprepared, because, we have also interacted with some fantastic folks who are just earlier on their journey, and who do need to now take the time to say, okay, what do I want? How am I going to grow this? And, and that's okay. So I guess another message is, don't worry if the timing isn't right for an investor at that point in time, because there can always be, further conversations down the road. So, but again, yeah, a pitfall that would probably scare an investor away for a longer period of time is if you just, don't appear to have a really firm grasp, because again, we're relying on the founder and their management team to drive the business. And so you need to prove that you have, what it takes to do that.
We have another question, but I'm just going to hang on, Melissa, because I see your question. I will definitely get there, but let me just ask you a question that somebody wrote in, and I hear this a lot from people. If you have an idea and a really unique selling proposition, a unique product, something that you really don't think is out there, and you're disrupting a space, how do you protect your concept, your idea, not everything is patentable. Is an NDA simply enough to go in and be able to share that? They're asking, how do you protect some of your ideas as you go out pitching?
Yeah, I'd love to hear what Karen has to say. Not being a lawyer, I don't know the technicalities. I'd say NDAs are very common in our industry and what we do, and so we do generally sign them before we get into a lot of detail. But that said, I don't really know what the legal technicalities are.
I know a lot of times people are concerned of people stealing ideas. I think also people are concerned that bigger companies with bigger wallets can steal ideas and take them into new heights much faster to market than somebody who has the concept. So that's always, but I know from my own experience, having a great idea and executing it is two different things. So I finally had to just trust that I had to put it out there so I could find the right partners. But
and there's another layer of this, which is that the second you put a product into the market, literally the second it hits the shelf for the first time, you want people to want to steal that idea. You want it to be so good and so compelling that that suddenly everybody's gonna be thinking, that's a great thing and I want to do that myself. And so if you go into business for a really long time with this mindset of everybody's going to steal my ideas, like unfortunately it's going to really paralyze you for a really long time, because there is no way to protect a good idea. Actually, the thing you have to do is keep innovating and keep being a little bit ahead of the good ideas. So you trust your instincts, you say that was a good idea and it worked, and now I'm going to do another good idea and that's going to work, and that's going to be the nature of my company, as opposed to keeping things close to your chest, because that's certainly not how you sell alcohol beverages, is by keeping anything close to your chest. And so, for me, like the ultimate good position is always when people say to me, I love what you're doing and I would love to do something like that myself someday. That's a high compliment.
That's great. And we do have a question from Melissa for you, Karen, as well. Is there anything in the pitch meeting that you wish you had prepared for more, or that may have surprised you?
It's a great question. There weren't any surprises in my meeting with Jen. I mean, it was such a great experience for me. But I know that if I had not done the preparation that I did going into it, that I would not have been as prepared. So, a couple of key pieces of advice that I got that I think this group would benefit from. One was, go in really, really clear on what your plan is. And the plan is not just if Constellation comes on board. This is my plan. This is what I'm doing. And I will be doing it regardless of Constellation's ultimate position. And that's been true for me from the start. I have a strategy. It took me almost no time at all to put it on paper, because it's so clear in my head, and it's not, I don't rely on Constellation to make that strategy happen. I rely on me to make it happen. And so I was able to go in with an exact number of dollars, an exact sense of my valuation, and a very clear strategic plan of what I would do with the money, and also the clear message that I'm going to raise this money either way, and I feel confident about that. And so then the second piece of advice that really helped me was line up the facts, but not the conclusions. So I worked really hard in my meeting with Jen not to say Montanya is amazing, or I am a leader in the world of rum, or in the world of gender in craft spirits, or et cetera, et cetera. I just tried to line up, like, this is what I'm doing, and this is the feedback that we're getting from the world, or these are the speeches that I've made, or the opportunities that I've had, or this is the this is where we are positioned in the world of rum, because I needed to have confidence that Jen, she's going to look at all of that information and evaluate for herself, and her conclusions are going to be her own. And I felt like that went well in the moment, that hopefully she walked away with a sense of everything that my company is without me having to tell her any of the conclusions. That was important to me. And then the third thing that was important to me was never to apologize for anything that didn't happen exactly as I thought it would or as fast as I wanted it to, or, no, I think we as women, we have this tendency to come into things and say, I know I could have done this differently, or I should have done this better, or, a lot of self-deprecation and a lot of like, I don't want to be seen as having too much ego around this. And what I really wanted to do was describe the landscape of what my company is and has been, and where it's going, and then also be able to say how proud I am of what I've accomplished, and line those facts out, because I do have just this amazing amount of pride. And if nothing else, pitching to a venture group lets you take a really hard look at yourself, and ideally what you see is something that makes you incredibly proud because you've been working really hard. And if it doesn't, if you're seeing a lot of red flags of your own when you're in there, then that's instructive too. And that was what was, whatever happens in my world related to money, putting out all the materials together and the strategic planning and all of that has been so fun because it helps me to see how far I've come.
That's fantastic. It is absolutely. For Jen, and it could be for Karen as well. Jen, we had a question from somebody. When should the founder present the financial ask? Do you recommend putting it front and center near the beginning, or wait towards the end of the pitch?
I don't think either way is better. It depends on the flow of your story. Perhaps it makes, I guess my gut reaction is towards the end of the pitch, or at least so you've had a chance to build the story and get the investor excited about the opportunity versus just coming in and saying, hi, I'd like X million dollars, and then telling them why. So yeah, maybe tell the story a little bit. But I think everything that Karen just said is spot on. And I forgot to mention that earlier around, when you are making the pitch, being very clear on what you're looking for, how you're going to use it, why you want to partner with a strategic, what you're looking for from them, what you yourself and your team bring to the table. And then, perhaps not that first conversation, but shortly thereafter, it is important for you as founders to know what you believe the valuation of your company is and have that based on, real rational assumptions, because that will be asked. And if at that point, you haven't thought about it yet, or you don't really know, that could also be an indication that it might be a bit too soon to make an investment.
Mm-hmm.
One of the other things that I did was I really analyzed past deals that Constellation had done, because I wanted to understand what all the pieces were. So I knew a lot of the companies from my own, especially in the craft spirits space. I knew a lot of those companies, and I knew people who were involved with them. And I was able to kind of analyze it as, am I going to be able to rise to these challenges that have existed in deals that Constellation's been involved with other companies? And that helped me to go in pretty confidently about the fact that I'm ready for this. But I don't think I would have been ready a couple years ago. Looking back at where I was and what I needed to cultivate in-house to be ready. And I'm glad now that I didn't move forward with some things then, because I think I would have looked on paper and, in my presentations, a little less focused, a little less, kind of strongly clear on exactly what comes next. I think it's okay to look at yourself and say, I'm not ready, because I'm not clear yet enough on exactly how I would execute an aggressive volume growth plan. I don't have my ducks in a row yet.
Yeah, no, that's a great piece of advice. Like you say, you're not ready, um, and Jen, you mentioned before about understanding the valuation as the founder, right? One of the questions that we have is, um, do you recommend getting a professional outside valuation, for your company or are there resources for entrepreneurs to find comparisons for creating valuation?
Yeah, I mean, I think it's a very individual answer. So I guess it depends is the answer, and it's part of it is for the investor to see the entrepreneur's thought process, and to see, do they know how to value a company? Are they thinking about it in a way that that is rational and makes sense? So I guess I can't really give away any answers here because that's part of the test.
Well, you know what else, Jen, is the fact that most of the success, right? The financials are not disclosed to the public. So we see that there's, investments being made. We see that there may be acquisitions being made or things happening, but most of the time we don't get to, as fellow entrepreneurs in the industry, actually see what the numbers were. Karen, do you have any advice on how somebody can look at valuation? Did you have outside help with that, or how did you find that?
Yes and no. I mean, ultimately, I had to choose a valuation strategy that felt comfortable to me and that I felt the numbers on the far end felt comfortable as well. Because it's amazing what people will tell me I should value my company at, and it doesn't resonate for me at all, because I need to feel as though it's legitimate, so for me, I looked at three different models very closely. I ran them algorithmically, all three of those models, and they came out to within $500,000 on the far end. Each one was so similar, and so I knew that if Jen said, "Okay, I don't really want to look at contribution margin. I want to look at, you know, anyway, there's a lot of detail I could go into here, but what I didn't want to do is I wanted to be able to say, if you choose a different model of valuation in your looking at us, I bet it's going to come out almost exactly the same at the end of that calculation. And so that was what I felt better about, was I'm choosing this valuation. This is why. There are so many variables, and probably the biggest case that I made is that my company has a really strong home. Like, we exist in a very specific area. It's more like, let's say, Tuthill Town and Hudson Baby Bourbon. Like, there's a lot of that company that's really tied to the Hudson Valley, tied to an agricultural model, tied to something beautiful that's a farm base. You know, that's a home-based brand, or that brand has a home. My brand has a home, which is a high mountain Colorado, a very different tradition, and so not everybody's going to be putting the same data in and getting the same data out. So at figuring out what you think is most valuable about you, but then making sure that actually makes sense to an investor, because you can't suddenly start making up ways to value a company. They need to know that that's an actual strategy that's been used by other people before. But I'm sure I didn't use exactly the same strategy that High West used, or that Real McCoy used, or some of my peers. But it's amazing how useful it is just to talk to people. There's plenty they can't tell you because they're covered by an NDA, or they've been asked to not disclose certain details of a transaction, and that's fine. It's also amazing how much good information you can get I spent hours on the phone with founders of High West and Real McCoy and companies that have already received venture money from Constellation, to really understand the nature of the relationship, and what I needed to be prepared for walking in that door.
Well, Karen, I love what you just said about speaking to people, because this is the reason why we're here with Women of the Vine and Spirits, is to build this community. Because when we were chatting before we went live, is the fact that there's not a lot of resources out there. And, it is amazing when you speak to people how they can really share with you, and you can learn so much from them. We're getting short on time, so I have two more questions, and if anybody else, keep typing them in, so I'm going to fill them off. The first one is, this is to you, Jen. As a strategic partner, apart from the financing, what does Constellation bring to the table for a mid-sized brand?
As I said, we're strategic investors, so we provide a lot of value added with our portfolio companies. So we, and again, it really just depends on where the company is, thinking about brand positioning or marketing strategy. We could talk about, again, market expansion, which markets does it make sense to go into and to prioritize. We've kicked off a really robust annual planning process with all of our portfolio companies. So we sit with each one at the beginning of the year, and we look at market trends. We have access to loads of, syndicated and competitive data and consumer data. So we really work together to think about, what growth trajectory makes sense, and then what steps need to be taken in order to realize that growth in the coming year. So that's just a small laundry list, but we're here to also leverage, a lot of the expertise that we have within Constellation, so we can reach into the organization and get subject matter experts in digital marketing or e-commerce, what have you. So it just depends on the individual company's needs.
Wonderful. And Karen, when you started your company, did you have a partner, or did you self-finance and do it yourself?
I started the company with $25,000 out of my own pocket. I got a loan from an economic development entity for about $25,000, and that got me through the first 5 years. And then at the 5-year mark, I brought on my first angels, really only to the tune of about maybe $250,000, $300,000. And then that continued to ramp up to where now I have another, it's an institutional investment LLC. It's not a venture fund, but it represents 17 different investors, and that they've now come in a number of different times because they're excited at the growth that I'm able to show them with the funds that they've invested. And then, but they really recognize that they're not going to ever be big enough to take me to the next level. And, they don't want to get in the way. They want to move aside. And also, I've never yet had the benefit of an industry investor. So everybody that I've had so far is kind of on the outside of the industry, really interested in it and wanting to get involved with it. But it was time for me to be able to tap some of that expertise and validity that comes with folks within the industry getting interested in your company and believing you're on a trajectory that they can support. Then all of a sudden, it's amazing how the resources, not just from a company like Constellation, but everybody, starts to rally around you, and then you can really you can really launch into that next phase.
That's wonderful, because I experienced the same thing. I mean, most of your initial seed money and angels is coming from friends and family, as they say, right? because they know you, they're going to take, but that doesn't mean that they're industry. So to Jen's point, really discussing how it's a strategic investor. Now it's ready to help you get to that next step.
Well, and I had a maybe somewhat of an unusual experience, but I had a major investor die at the age of 53 of prostate cancer. And that really set me on my heels, because not only was he a strong financial backer, but he was also one of my closest advisors. He, was worked for a company, huge capital investment company, based out of San Francisco, like really high level analytical thinking about the company. And when he passed away, I felt such a valued partnership. And that was the moment at which I realized, like, I have to find another partner. I've lost this. I can't continue without it. And that was when I really went on an active campaign to figure out who that next partner was going to be.
Wow. So we only have a few minutes left. Does anybody have any other questions? I don't see any other ones written here. So I guess, well, there is one more question that just came in, and then we'll kind of wrap things up. For Karen, how did you maintain creative control of your company with angel VCs?
So I've historically had two primary classes of investment in my company, 3 now. But there's like a management class that I control 100% of, and there's a non-management class that I still actually own about 40%, 30% of. So for me, I have strategically brought investors into the non-management class of the company, which meant that they had input on my budget, they had input on my annual planning, they had input on whether or not I sell the company. They got first dibs on any issuing of new stock or sale of new shares in the company, but they were not telling me how to spend money each day, what distributors to say yes to, no to, where to travel tomorrow, to where should I be to have the best profile in the industry, et cetera. And so as a result, I retained a lot of that creative freedom. But I did reach a point in the last couple of years where I thought, I'm irrationally holding on to my management class, that some of the companies that I was studying were letting go of a piece of their management class investment in order to bring on some exceptional expertise. And that's a direction that I've started to kind of inch toward, is I want to bring exceptional expertise into the company, because I've pretty well played out a lot of what I think I know. I'm like at the edge. I have good instincts and I have a strong founder presence, but I am really kind of precipitously at the edge of what I think I know about the industry. And I need really good, exceptional people on my team. And so I became open to potentially selling shares in my management class in exchange for management.
Yeah. So we're only about a minute left. I'd like to just give Jen an opportunity to say some closing and what you want to say to the team. If anybody has questions there, we do have our entrepreneur discussion group online on Women of the Vine and Spirits. So please continue asking questions there, because we can try to address some of the questions as well. And let us know if this was worthwhile and if we should continue to have discussions like this on capital and other subjects that you would like to hear about. So Jen, do you have any final words on pitching for the audience?
Sure. So yeah, again, it's all about preparation and being very thoughtful in terms of your story, what you have to offer, what the business case is at the end of the day. And, this is about about growth and showing that, you know, that idea can generate, you know, positive profits. And then, you know, just in thinking about the broader picture too, think about who you're pitching to, what their interests are, and then, you know, do your very best to then show how your pitch is going to fit a need that they have.
That's great. Well, I can't thank you enough for joining us. I know that both of you just flew back from a conference that you were in, so it is just such an honor to have you, you know, share. And it is so valuable for you to give this information to us. And so thank you so much. And I wish everybody a wonderful rest of their day.
A pleasure.
Thanks. Bye, everyone.
Bye.